Welcome back to the deep dive. It is Wednesday, February 11th, 2026. And today we are checking in to the global economy, but we're doing it through the lobby of a hotel,
A very, very big hotel.
a very big hotel. Hilton Worldwide just dropped their Q4 2025 earnings this morning. And, I usually kind of gloss over these calls, but this one felt different.
It really did. People always look at like shipping containers or copper prices to see where the
Yeah.
world is going. But a massive hotel chain like Hilton, it's often a much better proxy.
How so?
Well, it tells you how people are actually feeling and more importantly, how they're spending in real time.
Right, because nobody books a vacation if they're worried about their job, and companies don't send people flying around if they're tightening their belts. So we've got the press release, the full transcript with the CEO, Chris Nassetta, and some market data.
And the real story here isn't just about, room rates.
Not at all. It's about a massive bet on AI, a brand new type of hotel for college towns, and a really specific, maybe even controversial take on the American middle class.
It's a fascinating narrative. We had this messy end to 2025, political gridlock, crazy weather. But Hilton is projecting an incredibly bullish 2026.
Bullish is one word for it. Let's start with the vibe on the call, though, because things got a little spicy.
They really did.
Usually these things are just suits congratulating each other, but there was a moment where an analyst basically accused the CEO, Chris Nassetta, of being delusional.
Pollyannism. That was the actual word he used.
Pollyannism, I mean, that's basically someone who's just blindly optimistic, right? Like smiling while the house is burning down.
Exactly. And in the context of Wall Street, that is a sharp insult. It implies you aren't looking at the data, you're just, hoping for the best.
The analyst was basically saying, hey, the end of 2025 was rough. How can you possibly be this positive about 2026?
And Nassetta did not back down. He fired back with, how about optimism instead of Pollyannish? Which is a pretty good line.
It was a good line, but he didn't just leave it at that. He actually laid out a whole thesis.
He did. He gave, I think, 3 or 4 very specific reasons why he thinks the economy is about to turn a corner. This wasn't just vibes.
Okay, let's unpack those, because if he's right, this is bigger than just Hilton. First up was inflation. He's basically saying the data is lying to us.
Well, not lying, but lagging. He pointed specifically to housing data.
Okay.
When the government calculates CPI, there's this lag effect. It takes a while for a drop in real-time rents to actually show up in the official numbers.
So he's saying, look, we see the real-time data, structural inflation is down,
Yeah.
the government just hasn't caught up yet.
Exactly. So in his mind, the war on inflation is pretty much over.
Which means interest rates keep coming down and people have more money to spend.
Right. Then he pivoted to something else, the deregulatory environment.
Okay, I know what that means in general, but how does that help a hotel?
Think about it. When you cut regulations in sectors like energy or financial services, projects that were stuck suddenly get the green light. You start drilling, you start building.
And who does all that work? Engineers, consultants, construction managers.
And they all travel. They all need hotel rooms. He's betting that a wave of deregulation is going to kickstart business travel, which has been lagging for a while.
That makes sense. But the big one, the one that really made me sit up, was the AI number he threw out. It felt imaginary.
It does sound like sci-fi numbers, yeah. He said major tech companies are spending $700 billion this year alone on AI infrastructure.
700 billion.
And that's heading toward $1 trillion. $1 trillion.
Wow.
And his argument is, you don't spend $1 trillion just to make funny chatbots. He sees this as the start of a historic productivity boom, an economic unlock like the internet in the late 90s.
And when companies get more productive, the whole economy grows, wages rise, and
People travel more. You got it.
which leads to his final point, which I thought was the most interesting. He thinks we're finally seeing the end of the K-shaped economy.
Yeah, can you just quickly remind everyone what that means?
Sure. Picture the letter P. The vertical line is the crisis. Then the top line goes up. That's the wealthy, the asset owners. They've done great. And the bottom line goes down. That's the middle class, lower income folks who just got crushed by inflation.
Right. The rich got richer and everyone else got expensive groceries.
Exactly. And Nassetta is saying that split is ending. He believes we're moving to broader growth where the middle class finally sees real wage growth that's actually beating inflation.
And that matters for Hilton specifically because
Why?
Hilton is a mass market beast. I mean, sure, they have the Waldorf Astoria, but their engine is the Hampton Inn, the Hilton Garden Inn. If the middle class has money again, Hilton wins. This is a bet on the average American family.
Okay, so that's the optimistic case.
Yeah.
But I have to play devil's advocate here because if you look at the actual numbers they just put up for Q4 2025, especially in the U.S., they were kind of ugly.
They were mixed, for sure. It was a tale of two very different markets. Globally, they beat expectations. Adjusted EPS was $2.08, beating the $2.02 estimate. So profitable, but the U.S. numbers, I'm looking at RevPAR, revenue per available room, it actually fell 1.6% in the U.S.
Hey, wait, let's pause there. RevPAR. We see it in every hotel report. What is that exactly?
It's the vital sign. It's revenue per available room. It combines two things: how full your hotel is, occupancy, and how much you charge for the rooms, the rate.
Got it. So it tells you the actual health of the revenue stream.
Precisely.
So in the U.S., that health score dropped. Why?
It was a perfect storm. I mean, literally, there were some bad weather impacts. But the big one was political. We all remember the end of 2025.
The government shutdown. Yeah, I tried to block that out.
The prolonged U.S. government shutdown, as Niceta called it. He said it was the biggest in history. And when the federal government shuts down, a huge amount of travel just evaporates.
It's like turning off a faucet.
Exactly. And then on top of that, the headlines about political chaos scare away international tourists. They decide to go to Paris instead of D.C. So, yeah, the U.S. took a hit.
But the international business was strong.
Better than strong. Europe was up over 5%. The Middle East and Africa region was up nearly 16%. So that global diversification really saved their bacon this quarter.
Okay, so Q4 was rough in the States.
Yeah.
But looking at 2026, Hilton's guiding for, what, 1% to 2% system-wide growth? That sounds, I don't know, modest?
It sounds conservative, right? But you have to remember the comps, the comparisons. They're coming off a quarter with a massive shutdown, so the math gets easier.
Oh, okay.
But more importantly, 2026 isn't a normal year. You have what I call event stimulus.
Oh, right, the World Cup?
The World Cup with matches all across North America. That's millions of room nights.
Yeah.
And we also have the America 250 celebration, the semi-quincentennial.
I am never going to be able to say that word.
Just means 250th birthday. But think about it. Huge events, massive tourism, plus recovering from that shutdown. It creates this natural tailwind.
So he's saying, ignore the messy Q4. The party starts in 2026.
Basically, yeah.
Okay, let's talk about the hotels themselves, because there's a metric here I need you to explain. NUG sounds like something I'd order at a drive-thru.
It does. It's net unit growth.
Yeah.
And in the hotel business, this is the holy grail. It's just how fast you're adding new hotels to your system.
And Hilton is adding them fast.
Fast is an understatement. They added nearly 100,000 rooms in 2025. But the stat that made me actually stop and double-check the math was about their pipeline.
Okay, lay it on me.
Right now, if you look at every single hotel room under construction in the entire world.
Not just Hilton, everything.
Everything. Marriott, Hyatt, a mom and pop, all of it. Approximately 1 in every 5 of those rooms is going to be a Hilton.
Wait, hold on. Say that again. 1 in 5.
1 in 5. 20% of all global hotel construction.
Is that good? I mean, it sounds incredible, but are they going to oversaturate the market? Are they just going to end up with a Hampton Inn across the street from a Hilton Garden Inn?
That's the billion-dollar question. But Hilton argues they have so many different brands at different price points that they aren't competing with themselves. A luxury Waldorf and a budget-friendly Spark serve totally different customers.
But how are they convincing all these developers to build Hiltons? I've heard chains sometimes have to pay developers.
Right, that's called key money. It's basically a signing bonus for a hotel owner.
So is Hilton just spending a fortune on key money to get to that 20% number?
And that's the crazy part. No, their key money spending is flat. They aren't buying this growth. Developers are lining up to pay Hilton for the privilege of using their brand name.
Because the brand fills the beds.
Exactly. And this gets to why Wall Street loves this stock. Niceta calls Hilton a capital-light serial compounder.
Which sounds like complete finance mumbo-jumbo. Translate.
Okay, think of a lemonade stand. To grow, you usually have to buy more lemons, build more stands. That's capital intensive.
Right.
Hilton's different. They just sell the recipe and the sign. The developer pays for the building, the staff, everything. Hilton just takes a small cut of every dollar that comes in.
So they get the revenue without the risk of owning the real estate.
Precisely. That's capital light. They don't need to spend their own money to grow. They use other people's money. It generates a ton of free cash, which they then use to buy back their own stock.
Which makes the remaining shares more valuable. Smart. But let's talk about what they're building. Because they announced a new brand with a name that, Well, I actually love it.
You're talking about undergraduate.
Undergraduate. It's so literal. They already have graduate hotels, which are those fancy, nostalgic hotels next to big universities.
Right. Hilton bought that brand recently. It's what they call upper upscale. Think leather couches, school colors, maybe $300, $400 a night. It works in big college towns.
But Naceta said that's not enough.
He pointed out there are hundreds of smaller university markets, smaller state schools, liberal arts colleges, that have that school spirit demand, but people there can't or won't pay $400 a night.
So undergraduate is the budget version.
It's the mid-scale version. It's for the parents visiting their kid at a smaller state school or the alumni coming back for a game who want a cool place that feels like part of the university, but at a price that makes sense.
That's so clever. Hook them with the undergraduate when they're young, upgrade them to the graduate when they get rich.
And don't forget the apartment collection.
Oh, yeah, what's that? Hilton trying to be Airbnb?
Sort of. They see this white space where people want an apartment, a kitchen, a living room, but they're tired of the inconsistency of Airbnb.
I get that. You want a kitchen, but you also want to know there's a front desk if something breaks.
And, crucially, you want the Hilton Honors points. So they're attacking every segment. Luxury, mid-scale, extended stay.
Okay, we have to talk about tech. Because every company says they're using AI. My toaster probably says it uses AI. But Naceta suggested Hilton has a specific advantage because of their tech stack. What does that even mean?
This is actually a huge competitive moat for them. A lot of the older hotel chains are running on legacy systems. We're talking mainframe tech from the 80s that's been patched together for decades.
And Hilton.
Hilton spent the last decade rebuilding their entire system in the cloud. They have a modern stack. That means they can plug in partners like OpenAI and Google almost immediately.
Okay, but what does that do for me, the traveler? Is a robot just checking me in?
It's about distribution. This is the invisible war in the hotel industry. Hilton wants you to book directly with them, not through Expedia or Booking.com.
Because those sites take a huge commission. The middleman fee.
Exactly. And Naceta believes that as AI search gets better, he calls it dreaming natural search, those distribution costs will drop.
Dreaming search.
Yeah, imagine instead typing Hotel Chicago downtown. You just say to your phone, plan a romantic weekend in Chicago near the Bean with a great view.
The AI understands the nuance.
It understands the nuance. And if Hilton has the best data and the best connectivity, the AI surfaces the Hilton property directly to you. It cuts out the middleman.
So the AI becomes the travel agent.
Ideally, yeah.
Yeah.
It removes the friction, you find the hotel faster, and Hilton keeps more of the money.
And he also mentioned using AI to actually open the hotels.
Yeah, on the operations side, opening a hotel is a logistical nightmare. Thousands of steps, dozens of people. They're using AI to coordinate that whole process.
And if you can open a hotel 1 month faster.
That's one extra month of revenue you just created out of thin air. It's all about efficiency.
Okay, so bringing it all back home, we have a CEO who says the economy is about to boom, a construction pipeline that is just eating the world, and a tech advantage that keeps margins high.
And they're returning billions to shareholders. $3.3 billion last year, planning on $3.5 billion this year.
The capital-light serial compounder at work. It paints a pretty rosy picture. But before we sign off, I have a thought that's been nagging me. We talked about graduate and undergraduate, and they're looking at student housing, too. Is Hilton slowly becoming the world's biggest university campus landlord?
You know, that is a really interesting way to look at it. If you capture the student with housing, the parents with the undergraduate hotel, the rich alumni with the graduate,
Yeah.
and you get them all into the loyalty program,
You've monetized the entire university ecosystem.
it's cradle-to-grave hospitality, or at least freshman to alumni.
It's a smart strategy.
Yeah,
Universities are recession-resistant. People always go to college.
it's a very sticky business.
Well, there you have it. Whether you think it's Pollyannism or just smart business, Hilton is betting big on 2026.
Indeed. It's going to be a fascinating year to watch.
Keep learning, and we'll catch you on the next Deep Dive.